All right, we are live for a Friday edition of the M&M Show, the Mike and Mario Show. Excited to be back with my good guy here, Mario and Echo. How you doing, Mario?
I'm doing well, and you, Mike?
I'm doing good, my friend. Doing good. Excited to connect. Definitely, since we've connected last Friday, of course, a lot of things happen in between. So we're going to touch on a little bit of everything as best as we can, and then hopefully get a chance to speak to some viewers, whoever wants to call in and let their voice be heard. But for the most part, where you want to start this off at? We can go right to some articles, or what do you want to touch on first?
Yeah, I guess the gas crisis, the mini crisis we had earlier this week in the U.S., where people were queuing up or lining up for gasoline.
Yeah,
I think that was a little bit of an engineered thing. This hack, I heard they had to pay them with cryptocurrency, but I think that's gone now. But it's going to leave some kind of mental hint for people, or is some kind of conditioning. I think there's something behind that for something bigger to come. Last year, Klaus Schwab of the World Economic Forum said that a hack is going to be a serious thing in the future. So I think they're setting us up for it, and I think that people reacted a little bit like last year with the toilet paper, toilet rolls. It was just a little bit exaggerated, but it shows that the system is vulnerable, especially in the U.S., because the U.S. is the country that the globalists hate the most. Because the U.S. is too prosperous, too independent, and Europe, unfortunately, they've brought us down to our knees. They have been doing it for over 100 years, since World War I. So we are easy pickings, but the Americans, they still have their Second Amendment. There's still a lot of red states out there. So I think that was an important thing. So
I'm actually trying to pull up an article right now, but it's not loading. But I touched on it earlier this week as well. And, nothing seemed right about it. Like, even having some group talk with some of the community members, nothing seemed right about it, because the actual ransomware attack on a pipeline, I was told from some people who know the energy sector that, the actual operations of the pipeline and all this software stuff is not even connected to the internet. Like, there's a disconnect, so that there can't be a direct access to that because of cyber concerns. And of course, as you mentioned, the Klaus Schwab situation, I actually played a video of him saying that, the current pandemic is just basically, it's a starter kit in comparison to our greatest threat, which will be a cyber attack on the internet. I'm thinking like, wow, like he's literally priming us for something, that is probably in the future. And then we got the cyborg meeting coming up in I think July 5th, where it's another walkthrough similar to the the Event 201 type of thing that happened with the pandemic situation. So there's a cyber attack organization type of gathering coming up as well. So it's definitely some priming for something. So
probably a warm up for the next crisis, just like Event 201.
Exactly.
Unfortunately.
And then also, did you see how I was highlighting yesterday how the mainstream narratives here in the U.S. was that one of the news sources said they paid in Bitcoin, and then the other one said they paid in a untraceable privacy coin. And so two conflicting stories from reliable sources that have firsthand knowledge on dealing with all that, and they actually supposedly paid it within hours of it actually happening last Friday, but we didn't hear about all this till yesterday. So I'm like,
it could have been
cryptocurrency or something, or what?
Could have been Pirate Chain, which is like a very dark coin. It's, I think the ticker's ARRR. But
you think they would use that, or Monero? Like Monero's
Monero as well, yeah.
But
I think a lot of people that got into Monero are going into the Pirate Chain. But this situation is it was strange. I have a friend as well from high school that lives in Miami, and he's in the energy sector, and I sent him a message, I think Sunday or Monday morning via LinkedIn, and he hadn't even heard of it. And he originally told me, oh, this shouldn't be important because, like you said, the same thing your guy said. But they made a big deal out of it. So I think, they made a big deal out of it. But it's to condition people. I think that's what it was.
Yeah.
So the other thing I saw this week that I thought was really significant, especially for the silver squeeze movement and Wall Street silver, which Wall Street Silver is doing a good job with Reddit, their subreddit group, with their YouTube channel. I think the small investor is putting pressure on the bullion banks because the LBMA, it came out earlier this month, I think the 9th of May, they had to admit that for over a month, they lied about how much silver they had in London. They say it was a reporting error, but 106 million ounces. I mean, that's a huge error. When I worked as a futures broker, if I made an error with a client's order, and how that worked was, for example, a client gave me an order to buy, and it does happen. You sell sometimes, and people say, "How can you sell if they say to buy?" Well, when it's busy and it's noisy, you don't hear very well. You put the order in quickly. But if I had an error like of $106,000 offside for one day, the head of my firm would be after me, very quickly. So the fact that the LBMA allowed probably JP Morgan, I would say, to inflate fictitiously the amount of silver they have by 106 million ounces is very significant. It shows that we're making a difference. The silver stackers and the apes, we have to keep going. I thought that was a significant story. Yes, the price of silver is still under control of the paper market. But I think they're gonna have a tough time controlling it. And you mentioned an article about Basel III that actually segues into that. Maybe you want to talk about it.
So before we move on to that one, I want to just the idea, because I was listening to some commentators talk about the amount of tonnage, 3,300 tons of them overstating. I'm thinking like that's the equivalent of a nice sized warehouse. Like, how could you have such an error where that's a little bit too much, I would imagine. So the fact that it can fly under the radar and it not be something that's investigated by nothing, is just, we keep moving, we made an error, keep moving, and slap on the wrist, nothing. So very interesting. So the Basel III, I think, as you hinted at, I wanted to just touch on that because I think that's, will that break the manipulators back? Will that end this current price suppression mechanism that's been in play for the last almost 50 years now through little futures and stuff like that? And so a lot of people are excited about it, saying that June 28th is going to be the day that things change. What are you thinking? Is that the case, or are they still going to be in control somehow, some way? And why now? It will be the question.
Yeah, I read the article by Alistair McLeod on Gold Money. And it's a very good article. And I'm not going to go through the whole thing, but I recommend people read it. They might have to read it 2 or 3 times, and it's long, but it's even for me, I had to reread parts. But basically what's happening is that the Bank for International Settlements and their Financial Stability Board, or FSB, they regulate the too big to fail banks, the major international banks. And Basel III rules, they have been implementing the Basel III rules for the last few years. There's no set date for the whole thing to be implemented. But by the end of June, for example, EU banks, they won't be able to basically use unallocated gold as, how can I say, they will have to rate the weighting of unallocated gold to 0%. So that will mean that trading unallocated gold, which is basically, what they do, the manipulation with, is going to be very costly, and it will affect their balance sheet. And Alistair McLeod explains it very succinctly and very clearly. So what basically Basel III and the BIS, they feel that it's very risky for the system, this paper game of gold. But
so why now though? Like, that, and so at the midst of a so-called claim Great Reset agenda, like this is really disruptive, So who benefits from this would be the question.
Well, I think the Bank for International Settlements, they control the central banks. They're the central bank's bank, right?
Yeah.
And they're very powerful, and they feel that what they're doing in the derivatives market, in the gold derivatives market, is very risky. It could bring down the system. I think that's what they want to do. But this is not certain what's going to happen in the end of June, because the UK, we're not part of the EU anymore, and the LBMA, the London Bullion Market Association, which is the big banks in London, and the Bank of England and the World Gold Council, they've written a letter to the Prudential Regulatory Authority, PRA, in the UK, saying that this should be changed. The Basel III rule that unallocated gold should be counted as 85%. And we don't know yet whether the PRA, Prudential Regulatory Authority, is going to say, okay, we can do that. But I don't know if the BIS will allow that. But for the UK, the deadline is 1st of January 2022. For the EU banks, and a lot of the EU banks have offices in London, but Alistair MacLeod thinks that their domestic regulators are not going to allow them to keep operating as they do. As for the Americans, it's probably going to be the same thing. I'm not too sure, the American banks. But all it means is that the new Basel rules could basically kill off paper trading or unallocated gold. He explains really well that the reason why the Basel people are worried is because when you trade unallocated gold, there is no gold. It's just funny money, funny gold out of thin air. And that's what they want to stop. If you're going to trade gold, it's going to be for real hedging of miners and jewelers and refiners. It's going to be like the Shanghai Gold Exchange, which is a physical exchange. But you can bet, even the Bank of England, the LBMA, and the World Gold Council, they'll put up a fight. But it's going to be interesting, and it could affect silver in the same way. And this is what happened this week about the 106 million ounces could be just the beginning. It bears watching and seeing. It doesn't mean it's going to happen. I think the European banks are going to comply. And
so that's all it would need, though, right? If the European banks continue to press forward with this, there's going to be a drawdown on all the unallocated accounts and trying to actually get rid of those paper contracts and get physical. So it's going to be a lot of gold leaving the system, going into the bank's hands, central bank's hands. And I wonder how much of this had to do with, like, say, for example, over the last 4 or 5 years, I'm sure you've been talking about as well, as to how the repatriation. Germany wanted their gold back. Supposedly it took some time. You got every central bank around the world wanting their gold back. They obviously knew that this time was coming.
because Basel III has been in the works ever since just after the crisis of 2008. It's taken years to implement, and these guys know what's going on. Alistair MacLeod doesn't think the LBMA, the World Gold Council, and the Bank of England will be able to get a compromise on this. And what this is going to do, it's going to impact COMEX massively, because these interbank unallocated bullion traders, they use the COMEX to hedge a lot of their unallocated positions. So that will drain a lot of the liquidity off of COMEX, and that's also going to could potentially force the bullion banks to close out a lot of their short positions on COMEX, because they're hedging unallocated positions in the interbank market or in the LBMA. So it's going to be interesting. And even for the UK banks, if they don't get the compromise they will have till January 1st next year to unwind all their unallocated positions. He explains as well, unallocated position is on the balance sheet. It's a liability for the banks. But if they hold allocated gold, it's not on the balance sheet. And allocated gold is 100%, under Basel III rules. There's no, and I think unallocated gold as an asset to the banks is going to be counted as only 85% instead of 100%. So
maybe so while you're talking, so we are streaming live, so I want to make sure we make it available for people to chime in and share their 2 cents. So I want to there's a question here that makes a lot of sense. I'll put on the screen here. Let me see here. Here we grab this question. So Rob B says, why are we on the 3rd version of a failed 1 and 2 policy?
Basel III. Yeah, I know. I guess there will be a Basel IV, Rob, one day.
Yeah. And it's probably going to include a decentralized space or something like that. It's going to incorporate, these, digital assets, because
Dogecoin Act will occur.
Oh my goodness! Now watch this. So moving forward, so gold is still a part of the equation. It's a part of the monetary system because of all this Basel III noise, and of course silver always follow because it's gold's little brother or whatever. We'll see if that remains the case. But I wonder, on the Asian side of things, we know that China's been accumulating massive amounts, as well as Russia, for the last 20 plus years. I wonder, how will this play into their hands, because they're already heavily physically, accumulating gold, and they're waiting and ready. So will this literally usher in that reset? Because it's going to really force nations to say, how much gold do you have? How much you're sitting on, in order to really reestablish trust as we move away from the dollar.
Yeah, there's the old saying that he who has, or she who has the gold makes the rules.
Yeah.
And I think what it will mean, and I think Jim Sinclair used to say that, and I'm sure he still does, the people who have the gold, the real gold, like China and Russia, they're going to be at the head of the table when there's the negotiating and the reset.
Yeah.
I think the Europeans still have a lot of gold, the EU. The Germans, the Italians, the French, the British, and the Americans, I don't know. It's all up in the air. We don't know if all that gold is at Fort Knox, the 8,300 tons, and we only have 300 tons here in the UK, even though there's a lot of gold from other countries at the Bank of England, which I think is really silly for them to keep gold with the Bank of England.
Yeah. Because
we're an island, and the Bank of England and the UK could say, well, too bad, we've got it now.
Yeah. Now, I think our goal, I'm of the mindset Fort Knox is tungsten bars. I mean, it's nothing in there seriously. It's been leased out. We probably sent it east to basically accommodate China's need for gold, while we buy more time with that. But I think the federal lands here, like a good portion of the Western and Middle East hemisphere of the U.S., is all federal lands, to where the Grand Canyon and all that stuff, there's people out there say that there's, buku tons of gold. So I think we would end up having to give some of that land away if it came down to selling some of our debts, because as of right now, we're, over close to 200 trillion of debt that will not be paid back, but somebody's going to want we're going to have to settle up at one point. So we'll see. But then with all this current price manipulation of gold, and of course, since the amount of currency that's been created by all central banks has tallied, I hear it's for over, close to $400 trillion now of global debt, and you count everything that's been put out there. Now, I want to put this on the screen here. Do you think this equation still matters? This is Jim Sinclair, as you mentioned earlier. Simple math says 50,000 to 87,000 will be a gold price. So, do you actually see something like this coming about? And will it even matter? Will we price it in dollars?
Yeah, I mean, Jim Sinclair has been right a lot in the past. In the 1970s, he predicted way before it happened that gold would go to like $900, and it went to $887. I remember back in 03, 04, he said, well, gold is going to $1,650, and it did. back in, let's say, 2010, 2011. He was right about that. So I wouldn't question him on that. Yeah, it seems quite outlandish, $58,000 golds. But I'm of the opinion that we either gonna get maybe, let's say, 20,000, and then the system, they fix the system, or they don't. But yeah, that 58,000 or 87,000 gold would mean the world would be in trouble. There would be a lot of course, there's always a lot of opportunities. Yeah, but it would mean that the dollar is basically worthless.
Yeah. And my personal opinion is that we won't even price gold in dollars, because of course, in this current environment, in this current paradigm now, everything is priced in dollars because that's the world reserve currency. But I'm of the mindset that, technically speaking, of course, we got Druckenmiller this week talking about concern with, losing the dollar reserve status in the next 15 years. In my personal opinion, I'm not, a PhD economist, but I think the reserve status was lost 20 years ago. The moment that China went back onto a gold standard, when they began accumulating at an astronomical pace, as well as Russia. That was the beginning of the de-dollarization process. So to me, that was the end of the reserve status. Now it's still a part of the monetary system because everything's priced in it. But at some point, I don't think, we price things in the pound prior to the World War I. And so when the dollar's over with, then what? Will it be that bad? SDR? I mean, you see what I'm saying?
Or what they could do, and this is what Dan Oliver from Meerman Capital, he wrote something a few days ago. They could let gold go to, let's say, 35,000 or 85,000 or 58,000, like Jim Sinclair said. And then they could overnight say, oh, we're going to take 3 zeros, off the currency. Let's say it's at 35,000. And then they say each, 1 ounce of gold is going to be $35. Right. Or have you seen the gold eagles? They're $50, right? So let's say they let it go to 50,000, then they take 3 zeros out. So 1 ounce will become $50. But that means as well that your old dollars, you're not going to be able to buy anything with the old dollars. But with gold, you'll still be able. You'll still have its value. And they could do that. They've done that in the Latin American countries a lot, like Brazil.
Redenomination, Venezuela.
Redenomination, yeah. So they could do that. So yeah, things would still be priced in dollars, but unless you have gold, you're going to be naked, so to speak.
So speaking of which, I'm sorry, go ahead. I'll get excited.
So, they could do that. So there you go.
All right. So watch this. I did a video earlier where I was talking about, so I got all my bolivars right here. And so I got some of the most recent ones because I like to buy these things to do as props. So right here, I got a 20,000 Simon Bolivar. I got the 1,000. I got the 2,000, the 5,000. So this is the last previous version, and they chopped it off again, whatever. But if you're mentioning about, using the $50 actual, the statute, the price is listed on the gold coin itself, imagine what a $50 piece of paper would be worth in actual purchasing power. If that
would be worth like a 50,
like five,
just
like
take 3 zeros off of it. Yeah. So 5 cents. Yeah.
It'd be about 5 cents. So a $50 bill today would be about 5 cents in comparison to you holding an actual 50 piece gold. So that's crazy. So think about silver though. Like silver would literally have the purchasing power of $100 bill plus in an extremely hyperinflated type of environment, which will provide a lot of purchasing power, is what I'm getting at.
Yeah, so I guess silver, you just do 15 to 1. You know, I would say divided by 15. That would be the, just off the top of my head.
Yeah. Okay. So we do have a super chat here. For a question says, what would you let go first after the transition, gold or silver? Do you guys stack numismatic coins? What would you let go first after the transition, gold or silver?
Probably maybe a little bit of silver because silver will outperform gold.
Mhm.
And I do I do like numismatic coins.
Mhm.
I've been buying a few over the years.
Mhm.
I'm not like a specialist, but I like numismatic coins.
Now, what is it about the numismatics? Is it just like the collection aspect of it, the grading of them, or like what? Because I know Mike Maloney's and a lot of other people, even Lynette Zane mentioned.
Yeah, I don't do really a lot of research. I just like coins that I buy coins that I like. That's
Yeah,
all.
yeah,
And some of them are not as rare. Some are rarer. Some are valued more. I mean, yeah. So
yeah. That's real.
I,
And yeah, me personally, I've never done numismatics just because I prefer if I'm going to pay a little bit extra, in premium format, I'd rather get the hand poured version. So that's why I like, my own little coins and whatnot. I buy those because those are my version of collector's items that, I find I have value because I also like them as well. So, somebody says make it rain Boulevard. So, okay. So we are about 26 minutes. We got about 10, 15 more minutes. Try to get as much as we in. So let's, take some questions. So if you guys have questions or thoughts you want to share in or jump into conversation, feel free to do so. And we can also take a call or two if you guys are interested, want to call in and ask a question or share a thought, feel free to do so. And we can keep going. So while we're doing that, I want to make sure I thought another subject matter to you. McDonald's is hiking pay at 650 company-owned stores in the USA. So this inflation push, the lack of workers, they're trying to, I think 13 states in the US are now, doing away with the federal unemployment, stuff like that. So will it help? Will it help at all? Or is it too late in your opinion?
Well, I think it's all about the unintended consequences of government policy. They're paying people to not to work, and this is what happens.
Mm-hmm.
And I made a video a few weeks ago that if you took the minimum wage in 1964, it was $1.25,
Mm-hmm.
and back then the quarters were silver, 90% silver. So it was five quarters, and if you do the calculation, it's worth about $24 today.
Mm-hmm.
So $15 minimum wage, or even $17 or $18 minimum wage, they're going to say, oh, it's inflationary, but it's not inflationary, but it's still a ripoff for the general public, for the average worker. Yeah. I mean, what causes inflation is the Federal Reserve and the government by printing and borrowing money. I mean, look at executives. They didn't earn tens of millions or $20 million back in the 60s. Yeah. And that's what they do now. So, I mean, I'm not a socialist, but $15 is not much, really, considering how much inflation there has been.
Yeah, very true. And then we have another thought here. So this is geared towards you, Mario. It says, why is British coinage so confusing? The pence, the farthing, the crown, the shilling. That's a great question.
Well, the operative word is why was. Because we got rid of those denominations back in 1971. So since 1971, 1 pence is like a penny. So 100 pence is a pound. And they've gotten rid of the farthings, crowns, and shillings. But before that, 1 pound was 240 pence. And then I think a crown was 30 pence. So yeah, it was confusing, but it worked. But people had to know their maths a lot better. I think as people have been dumbed down over the decades, they had, and the reason they called it, they decimalized the currency in 1971. I think that was a way as well of inflating the system, because everything became more expensive. Anytime they change the denomination or the currency like that, you can bet that the people get screwed.
Very true. Very true. I'm sorry, go ahead.
It's not confusing anymore. It's like a decimalized. So 100 pence now is a pound, and we don't have farthings or crowns or shillings anymore. So there you go.
Simplified. And also on the term of inflation, I was actually looking at I think Visual Capitalists. that website to do the infographics. They came out with something not long ago, and they're talking about current inflation rates as of 2021 or something like that. Or no, I'm sorry, interest rates. I'm sorry. But then I end up doing some research, looking at the inflation rates in those same countries, and all the nations that have what looks like the highest level of interest rates right now. Of course, the U.S. is at 0, EU is negative something. Everything's negative something throughout the EU area. All the nations that have a relatively higher 3-4% interest rate, their inflation is like 10 times higher. And I was looking at Argentina, and Argentina's inflation rate, according to the infographic, their interest rate was 30 something percent. No, 30 something, or it was 30 something. No, it was double digits high. But then I looked at their savings deposit rate, and right now they're paying 34% for, depositing your pesos in a checking account there. And I'm thinking, like, think about, saving your currency in a dying currency, getting interest, getting 34% returns on your savings account. And over here in the developed world, we're not even getting 1%.
Yeah, the thing is, the people who run the major central banks, it's a club. So the Argentines and the Turks, they're not in the club. So there is like the Fed, the Bank of England, the ECB, they keep demand for their currencies strong. But Argentina, even though the rates are high, they won't touch that currency. So they just, there's no demand for it. That's why there's the inflation.
Yeah, it's worthless currency. Here is a thought from Miles. Miles, appreciate the love offering. It says, sold the majority of my stack to start a business, wanted a source of revenue before the collapse in hope of being able to rebuild, stack, and hold onto my metals in the future, looking at other countries that are always survivors. Okay, so he sold his stack to start a business, hoping he'd be able to get it back in the future. Now, give or take this current environment this summer, if this gold situation really takes off, silver will probably follow. What do you think? Do you think that would be a good idea to get rid of your metal and hope of buying it back cheaper, possibly in the future or something like that?
Not at this time. I mean, I think metals and tangibles or commodities are still heavily undervalued versus paper assets. But if Miles can find if he has an idea or a skill that he can turn into a business that gives him a good income, I wouldn't stop him from doing it, because in the end of the day, that's what you want, an income. But I wouldn't get rid of the whole stack, maybe part of it.
Yeah. Now, speaking of which, we got a lot of TikTok millionaires out there, a lot of Robin Hood millionaires. Let's all get rich. So what are your thoughts? So is this indication that with all these younger, unsophisticated, no technical, no financial skills having individuals out here, turning big profits, is this the signs that we're at the peak, or there's still room to go in all this?
I think we're pretty much getting near the peak. It's a symptom of all this easy money, the funny money. It's akin to what they used to say in the 1920s. The elevator boy, the guy who was running the elevator, was giving tips to the guys going to the office, to the stockbrokers, or the shoe shine boy was talking about the stocks he owned. I think that's what this is, just before everything, implodes, even though we're seeing that the stock market is rebounding in the last few days, but it's not a good sign. And especially the fact that young people, even like teenagers, they're making a living off this on TikTok. It's just, and they call themselves analysts, even though they're 15 or 16.
Yeah.
Not that they couldn't be, analysts at that age, but
it's just not likely, man. And that's the thing, because nothing makes sense to me. We're in an upside down world. Fundamentals are out the door. Price valuations is completely distorted because of just how central bank and monetary policy has really screwed stuff up, to where I think they want this thing to go up a lot more, just because I think it buys them time, because I don't think they want this transition into the digital world occur until they're ready. And like all the CBDC projects are still in trial and test runs in certain places. So do you think they want to have the CBDC stuff already implemented and running before they allow things to just go belly up, or what? Do you think they're in control of this?
I don't really think it matters that much, because a CBDC is just a name that they have for a technology.
Yeah.
They're still gonna try to peddle fiat currency.
Yeah.
They're just trying to improve the way that people can use their currency through the digital world. Right now, I mean, a lot of people use credit cards, debit cards. Anyway, it's all pretty much digital already. So yeah. And the other thing that is amazing about this TikTok is that they don't look at fundamentals anymore, what the company is earning. They just wait for when Elon Musk is comments on Dogecoin or on Bitcoin. And there's a coin that they call Elon, I forgot the coin, but people are buying it because they expect Elon Musk to comment on it, and that could make it go to the moon. I think that, and it could, but it just doesn't make sense.
Hey, watch this. Here's a question for you. This came up the other day. What would you rather have, a tulip during the tulip bubble, or some Dogecoin during this Elon Musk pump? Tulip is physical. Would you?
Yeah, I'd rather have the tulip. You could plant some tulips in the garden. It would look nicer. Dogecoin, you can't do much with it.
Yeah. Now, when you think in the history books, 20, 30, 40 years back, we look back in whatever world we're in at that moment, they say this crypto stuff, man, like there was stuff called Dogecoin, Shiba coin, Safe Moon, and they came with all types of things, and the people were flocking to it. Like, do you think they're going to laugh at us the way we probably laugh at the idea of having a tulip in a pot passing around?
Yeah, it's a little bit like in the 90s, a lot of the .com companies. Yeah. You had an idea and you put a .com on it, and you could go public on the stock market. And of course, the internet survived, and there are a lot of .coms, but there were a lot that were basically didn't survive. And I think, we're going to look back in 10, 20 years, there will still be crypto around and stuff, but the vast majority of them will have disappeared, I think.
Yeah. Now, here's a thought or something that should be concerning, I think. It says, a question says, Tether just said that it's backed by only 2.9% cash. Since Tether is the liquidity in the cryptos, please discuss your thoughts. Isn't this similar to unallocated silver?
Wow, that's surprising, because Tether is supposed to be 100% backed by the fiat dollar. And I had read over 6 months ago that Tether only had a 64% backing. I didn't realize it had gone down to 2.9. That basically means that it's almost more than 30 times leveraged. Yeah, I think silver is a lot more than 30 times leveraged.
So I wasn't even familiar with that, but yet didn't they just settle some type of situation with New York Attorney General or something like that?
There was some kind of case going there. I haven't looked at it, but the idea of Tether is that each Tether is backed by $1. Yeah. So the fact that it only has 2.9% backing is maybe goes to show why the crypto space has gone up so much. Yeah. Because they're basically creating Tether out of thin air to buy cryptos that are not supposed to be out of thin air. You're supposed to mine them.
Right. So they're basically, Tether. So here's an article here. I'm not sure this is, I'm not sure where this is as of today from some source, but it's saying 3.87. So if it's 2.9, 3.87, that's nowhere near 100%.
Yeah, you say here, it says here that 65% there. But so
commercial paper made up 65%.
That's quite significant. I mean, that it's because from what I understood about Tether is that it's basically you have $1 and you have one Tether, and that's it.
Yeah. And so I've been watching over the last several years, especially after the last 2017 bull run, where that whatever website it is that posts the amount of tether that was just minted, and typically that means there was a deposit somewhere.
It follows the price of Bitcoin, doesn't it? The supply of tether. There's always been a lot of discussion about that, and people writing about that, but it seems to get ignored.
Here's a thought here from Thunder Sound. Says Tether is China counterfeiting the USD like all other US products. That's the main crypto gateway for the Asian market. So
I don't think it's only China. You can't say it's China. What do you mean by China? I don't think the Chinese government could care less about Tether. I think it's just individuals and exchanges creating these coins.
Yeah. So we are approaching our 40-minute mark. And so we did not get a call, but we did get some thoughts shared as well as some super chats tomorrow. So I'll definitely make sure you get connected with that. And so getting ready for the weekend. Let's look ahead. What's coming next week? Are you keeping your eye on anything, or is there anything that we should be keeping an eye on that you're aware of?
No, I haven't really thought much about what's going on next week. To be honest, I will be interviewing Lynette Zhang on my channel on Tuesday. That should be interesting. I have to. We'll probably talk about Basel III and the reset she likes. Maybe a little bit about numismatics. No, but I haven't. I mean, the first week of the month is always important because you get the non-farm payroll like last Friday, and then you get the CPI and PPI numbers. But maybe look at the supply, of treasuries. There's a lot of supply of treasuries, but nothing in particular. Keep an eye on gold and silver.
Well, Mario, real quick before we sign off, let's get this one call out.
All right.
Hello, caller. What's your name? Where you calling from?
Hey, it's low blood pressure. I had to call in. You guys are lonely.
Low blood pressure. How you doing, man? What are your thoughts or question? What do you got going on?
Good. I wanted to ask Mario and yourself also. Do you guys think that they're gonna do how they did this fake hack or whatever? You think they're gonna hack the banking system to cover up the destruction of the monetary system? Listen up there.
Okay, appreciate it.
All right, guys. Have a good day.
You too.
All right, Mario.
That would be a good cover. You could say, well, the system came down because of the hack and not because of all the money printing we've had.
That'll work. That'll be. They can pull that off, and of course, who the U.S. gonna blame? Russia, Putin. Everything is Russia. Anyway, but all right, people. I appreciate the call, LBP. It's always great to hang out with Mr. Manico 64. Let me put this on the screen here so people can see. So, if you guys are not
March 17th,
there you go. So Manico 64 right there. And so go check them out. Make sure you subscribe, show them some love, do great work all the time over there. So Mario, as always, man, it's good to connect with you and just to be able to bounce ideas and hear your insights and vice versa. So thank you for joining us on the Mike and Mario show here. And other than that, let's have a good weekend. And then next week, there's going to be more than enough stuff to talk about. I'm thinking inflation is going to continue to steal the headlines moving forward. So we can talk about that as always. But anyway, everybody be blessed, be safe, have a great weekend. And we will see you guys later.